Hey guys, hope you are doing well and welcome to another new video. And this is Shoaib Hussain, your host. Welcome you to another new video about insurance. In our previous video, we talk about insurance a lot, and I hope you guys enjoy all the video. So if you guys enjoyed all the video but you don't subscribe our channel yet, then please subscribe our YouTube channel to get more videos like this. Okay, how much does casualty insurance cost? Okay, the cost of a casualty insurance depends on the types of policy chosen, as well as personal factors like your age, location, and coverage limits. While there is no golden standard for how much casualty insurance cost, consumer can purchase renter's coverage for a low as $5 per month, while the average auto casualty insurance premiums vary depending on the state. Your best bet is to shop around and get quotes from multiple trusted carriers to see which will provide you with the best coverage at the lowest rate. How we choose the best casualty insurance? Okay, to provide you with a reliable list of best casualty insurance carriers, we looked at more than 20 insurance companies. We compared the company operational story, product availability, financial strength rating, the price of casualty insurance coverage, and consumer review over time. We also considered to each with which you could obtain a quick purchase coverage and managing your policy. That's a very impressive thing. Okay, we talk about casualty insurance product. Now we talk about personal lines insurance. No, personal not. Professional property insurance. Replacement cost. We talk about replacement cost. Okay. Actually, what is replacement cost in insurance? We will talk about this in this video. Okay, what is replacement cost? Replacement cost is a term referred to the amount of money a business must currently spend to replace an essential asset like a real estate property, an investment security, a line of another item with one of the same or higher value. Sometimes referred to as a replacement value. A replacement cost may fluctuate depending on the factor such as the market value of the component used to reconstruct or repurchase the asset and the expenses involved in preparing asset for use. Insurance companies routinely use replacement cost to determine the value of an insured item. Replacement costs are likewise ritually used by an accountant who rely on depreciation to expense the cost of an asset over its useful life. The practice of calculating a replacement cost is known as replacement valuation. Replacing an asset can be an expensive decision, and companies analyze the net present value (NPV) of the future cash inflow and outflow to make purchasing decision. Once an asset is purchased, the company determines a useful life for the asset and depreciate the asset cost over the useful life. He talks about this. The replacement cost is an amount that a company pays to replace an essential asset that is priced at the same or equal value. The cost of replace an asset can change depending on variation in the market value of component used to reconstruct or repurchase the asset in other costs and need to get the asset ready for use. Companies look at the net present value and depreciation cost when deciding which asset need to be replaced and whether the cost worth these expenses. Understanding replacement cost. As a part of processing of determining what asset is need or replacement and what the value of the asset is, companies use a process called net present value to make a decision about an expensive asset purchase. Companies first decide on a discount rate, which is an assumption about minimum rate of return on any company investment. A business then consider the cash outflow for the purchase and the cash inflow generated based on the increased productivity of using a new and more productive asset. The cash inflow and outflow are adjusted to present value using the discount rate, and if the net total of all present value is positive amount, the company makes the purchase. Okay. Special consideration. When calculating the replacement cost of an asset, a company must account for depreciation cost. A business capitalizes an asset purchased by posting the cost of a new asset to an asset account, and the asset account is depreciated over the asset's useful life. Depreciation match the revenue earned by using the asset of the expenses of using the asset over time. The cost of the asset include all costs to prepare the asset for use, such as insurance cost and the cost of setup. Some assets are depreciated on the straight line basis, meaning the cost of asset is divided by the useful life to determine the annual depreciation amount. Other assets are depreciated on an what is the pronunciation of this word? Accelerated basis. So more depreciation is recognized in the early years and less in later years. The total depreciation expense recognized over the assets useful life is the same, regardless of which method used. Replacement cost budgeting. Given the cost of replacing expensive assets, well-managed firms create a capital expenditure budget to plan for both future asset purchasing and for how to firm will generally cash inflow to pay for the new asset. Budgeting for asset purchases is critical because replacing asset is required to operate the business. A manufacturer, for example, budget for equipment and machine replacement, and the retire budget to update the look to each store. So that's all about our today's video. If you like our today's video, then don't forget to subscribe our YouTube channel. Thank you very much for watching our videos.